This is the Southside School of Financial Freedom Watch List and Market Report for the week ending July 15th, 2023. Our question this week is, what is a growth stock? The answer will be provided later in the video. This week, the market ended higher. The Dow Jones Industrial Average increased 0.33% on Friday and was up 2.29% for the week. The S&P 500 decreased minus 0.1% on Friday, but was up 2.42% for the week. The Nasdaq decreased minus 0.18% on Friday, but was up 3.32% for the week. Looking at the week, we can see that there were 13 up finishes versus 2 down finishes for the major indexes. On Monday, Tuesday, Wednesday, and Thursday, all the major indexes finished up. On Friday, the Dow Jones Industrial Average finished up, while the S&P 500 and the Nasdaq finished down. New unemployment claims were 237,000. Wholesale prices, that is the Producers Price Index, rose 0.1%. Inflation rose 0.2% in June. Home prices hit new highs, raising 0.7% in May. Altcoins soared as much as 66% after a judge ruled against some of the SEC's claims, and the Federal Trade Commission lost an appeal to temporarily block a tie-up deal between Microsoft and Activision. New unemployment claims, the PPI rising 0.1%, inflation going up 0.2% in June, home prices hitting new highs, altcoins soaring 66%, and the FTC losing an appeal to block the Microsoft Activision deal are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is a growth stock? Growth stocks are stocks of corporations that are growing their revenue, cash flow, sales, and share price at a faster rate than the average corporation. Corporations that are growing rapidly generally do not pay dividends, as most of their profits are plowed back into the corporation for additional research and development and or more plant and equipment in order to get more growth. Technology companies often have growth stocks because there tends to be higher demand for new technology related products and services. Do you invest in growth stocks, or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you're going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor, and they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside Strategy. You can learn more about the Southside Trading Strategy at southsideschooloffinancialfreedom.com. Here is the Southside Trading Watch List from the week ending July 15th, 2023. The strongest performer on the list this week was Riot Platforms Incorporated, ticker symbol RIOT. It's in the third column. It was down minus 5.77% on Friday, but increased 23.51% for the week. Riot Platforms is a Bitcoin mining and blockchain company that focuses on three segments in the Bitcoin mining and blockchain development field: Bitcoin mining, data center hosting, and engineering. The company provides co-location services for institutional scale Bitcoin mining companies, and they provide critical infrastructure and workforce for institutional scale miners to deploy and operate their mining operations. The company also designs and manufactures power distribution equipment and custom engineered electrical products for their customers. Looking at a summary of results, you can see that Riot Platforms has increased 464% year to date. I generated cash flow from Riot Platforms this week, as I have in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside Portfolio Cash Flow System is outperforming the S&P 500 ETF SPY. The Southside Portfolio is up 38.36% versus 17.48% up for SPY, a difference of 20.88%. The Southside is beating SPY by more than 20%. The cash flow generated by the Southside Cash Flow System for this week was 4.31% of the portfolio account value. The account value changed by minus 0.43%. Meanwhile, the S&P 500 ETF SPY changed by 2.45%. Bitcoin Watch. Bitcoin gained 0.25% this past week and appears to be in a bull market, though it is down almost 56% from its all-time high, which was achieved in November 2021. It is up more than 83% year to date. I sold option contracts on 4 positions this week, 1 call and 3 puts that range from $7.34 to $108.34. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. To increase your financial IQ and understanding of the stock market, please check out our publication and our past videos for other questions of the week. The videos are organized in playlists levels 1, 2, and 3. They are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.